In this video, we're going to be analyzing a real estate investment trust, Omega Healthcare Investor, stock ticker OHI, currently trading at $29.99 per share. Now we can see over the past year, it's performed pretty well. It's up about 9.17%, and year to date, it's down about 0.3%. So to analyze this, we're actually going to be jumping into a new spreadsheet that I've created for the sole purpose of analyzing real estate investment trusts, as we can see right here. And we're going to be looking at 4 different valuation models. We're going to be looking at an AFFO multiples valuation, a historical price to AFFO valuation, a dividend discount model, and a net asset value valuation. And all of this will roll into our output tab. So let's go ahead and jump over to our real estate investment trust screener. As always, if you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. But what we're going to do is we're going to go ahead and come up here and plug in OHI and hit enter, and you can see all this data is going to automatically load in. We're currently looking at a 1-year chart. Let's go ahead and zoom out a little bit and say we want to look at a 700-day chart. I'll hit enter, and we can see the price action over the past 700 days for this company. Now, if we come over here, obviously a lot of people are going to invest into these type of real estate investment trusts for the dividend. We can see OHI is paying out $2.68 per share, which gives them a dividend yield of very close to 9%. Now, the payout ratio is showing 153%, but if you know anything about real estate investment trust, this is actually not a good way to figure out how much exactly they can pay out in dividends. We'll talk about that just a little bit more later in the video. But if we come down here, we can see analysts currently have a target price of $32.77 per share, and the beta for this company is about 1.05, so you will see just a little bit more volatility than normal in this company. But let's go ahead and look at our first valuation, and that's the AFFO multiples valuation. And if you've seen how I perform other valuations with the multiples, it's similar but slightly different. You can see instead of using a price to earnings multiple, a better way to see how the market is valuing real estate investment trust is the price to AFFO multiple. So we can see the comparable companies right here. I'm using other healthcare style real estate investment trust, and we're looking at their price to AFFO multiple. We take the average for those companies, and we can see once we plug all of that in, we come to an intrinsic value for OHI of $35.09 per share. So let's go ahead and move on to our next valuation. And the next one we're going to look at is the historical price to FFO valuation, as we can see right here. So let's go ahead and talk about exactly what's going on here. So obviously, the multiples is a great way to see how it trades in comparison to its competitors. This is a way to see how it's trading compared to its historical trading prices. So what we're doing is we're plugging in historical prices per share over the past 9, 10, or 11 years, and then we're plugging in our historical FFO per share. Now we can see we have a couple years where we don't have data. I did some research during that time period. I think there's a lot of missing and faulty data, so I just don't feel comfortable using this year's of data, but we still have enough data to make some assumptions right here. Well, we can see over the trailing 12 months, it's trading at about $30.06 per share, and trailing 12 months, the historical FFO is about $2.59. So this allows us to see historically where it's been trading over the past few years with its price to FFO multiple and where it's at right now. So right now, it's at about 11.63. We can see over the last 10 years on average, it's been trading at about 11.57. So it's trading very close to its historical price to FFO. And if we come down here, we can see a chart. It has been trading in that $10 to $15 price range since that time. So if we look at this, according to this, I think it is kind of showing that it's trading close to fair value. So while this doesn't give us an exact buying or entry point, we can make the assumption it is close to fair value. Now let's go ahead and move on to our dividend discount model. You're probably familiar with this valuation if you've watched the channel before. Essentially what it does is it values a company based on how much they pay out in dividends and how much that dividend is increasing over time. So what I'm doing here is I'm plugging in the quarterly dividends for OHI so we can see how much they're paying out each year. And this allows us to see our year-over-year growth rates, and we can see there has not been much dividend growth at all from this company over the past 4 to 5 years. An average growth rate of just 0.38%. They've only had 1 year out of this time period where they did actually increase their dividends. So moving forward, I'm projecting a very low growth rate of about 0.25%. A discount rate of 8%, which gives it a dividend discount model price per share of $34.67. Now, earlier I did mention payout ratio is not really the best way to judge out the safety of these dividend payouts when it comes to REITs. A much better metric to look at is the FFO payout ratio, and this is something you're going to want to look up with any REIT that you're investing in. But we can see for OHI, it's sitting at about 82%, which is somewhat typical for most REITs. I don't think this dividend is really in any danger in the near term. let's go ahead and move forward, and we'll look at our last valuation model, and that's going to be the net asset valuation model. Now, I know it looks like there's a whole lot going on here, but I'm going to explain exactly what we're looking at. Essentially, our entire valuation model is going to be right here. This is where we're going to plug in anything we need to plug in. But the first thing we need to do is look at the historical net operating income for the past year. So I plugged that number in right here. Now we need to project a growth rate for next year's net operating income. So to do that, I looked at what it's been over the past few years, and I felt like 10% was a somewhat safe assumption for the increase in net operating income. So we have that number right here. Now we also have an assumed cap rate right here, which I'll talk a little bit more about this in just a second, but I plugged in 4.5% to get the value of the assets, and then I subtracted out the total debt, and that gave us our net asset value. And once we have that number, we divide by the number of shares outstanding, and we come to a net asset value price per share of $30.73 per share. Now, when this valuation model is done correctly, it can be a really good way to value a real estate investment trust, but I do have a few problems with it. The main problem is it takes a lot of assumptions about growth rate and the cap rate. These assumptions are extremely important to getting a fair value for this intrinsic value model. So because of this, what I've done is I've come out here and built a sensitivity analysis. It's going to allow us to see, based off of what we assume for our cap rate and for our growth rates, we can see what different price points would be. So obviously we projected a 4.5% cap rate and next year's net operating income, this number right here. Based off of that, we can agree that the intrinsic value is about $30.73, which is what we have right here. But again, we can see exactly what that would look like, say if we had a 4% cap rate with that same next year net operating income. So essentially, this is just a good way to see, based off of your assumptions, where this could really end up. Now let's go ahead and jump over to our output tab. Because we have to make so many assumptions with the net asset value, I just really don't feel it's a fair valuation for this situation. So I'm actually going to remove this one, but we still have our two valuations, the AFFO multiples at 35 and the dividend discount model at 34.67. When we average those two together, we come to an intrinsic value of $34.88 per share. Now again, with the historical price to AFFO model, we don't get an entry point or an intrinsic value price point, but we did see that it is trading pretty close to fair value when you compare it to its history. So I think that kind of goes along with what we're looking at here. But even then, it looks like the intrinsic value is slightly above the current trading price for this company. So let's say we want to apply a 15% margin of safety. Based upon that, the acceptable buy price for this company is about $29.64 per share. So currently it's not quite at that buy range, but it is very close. And if we jump back over to Seeking Alpha, we can see there's been a lot of opportunities year to date where this this real estate investment trust has been trading below that price point. We can see there's a huge opportunity right here where it jumped down to about $25 per share. Right here was trading around $27 per share, and right here it was around $28.50 per share. So there are opportunities when you perform valuations and calculate intrinsic value, really keep up with these stocks over time. You will find opportunities to be able to jump into these REITs and these stocks. But there you go. There is an analysis on Omega Healthcare Investors. I'm going to be releasing a new video pretty soon going over exactly how this real estate investment trust valuation model works. I'm going to be going over that in detail because I want all of my subscribers to be able to utilize this tool. If you'd like to be able to download it, then you can head over to my Patreon page at the link in the description. So that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.